we are going to talk about one of the worst weeks in crypto history, pretty much outside of the crypto contagion. And again, you guys, sorry, I've been in crypto a long time, and since end of 2017, which is not long compared to some other people that are here since like 2010, 2011 or beginning. But this week has been absolutely atrocious for crypto. Like legal wise, it's freaking crazy. And Bitcoin has held support really well at about $63,000, which is outstanding. And if you zoom out with Bitcoin, you'll notice we're like in this like volatile consolidation range at like 60,000 to 73,000, which yes, it's a very big range. But if you zoom out, you'll see it's really not that bad. Bitcoin's already completed the 20% correction. We could have a 30% correction. To me, it doesn't matter because we have the Bitcoin spot ETF. And because we have TradFi that's invested in this stuff, we'll be okay. But we do have to discuss some of the things that happened this week. And then last night, we had a crazy announcement, which according to Caitlin Long, isn't really that bad. And I agree with her to an extent. And that has to do with people being able to collateralize their Bitcoin spot ETF shares or whatever it is they're holding and use for margin, which could cause a lot of volatility. So make sure to smash the like, subscribe, all of that fun stuff. Share this because I'm going to get this information out. So we'll talk about that towards the end, but I kind of want to give you guys a recap what happened this week because it was a lot of stuff, So as the SEC issued consensys, which is part of Ethereum, which is part of metamask, a well notice on April 10th. So what consensys decided to do was sue the SEC in Texas because the laws are a bit different there, better than New York for sure. So what the SEC is alleging is that Ethereum is a security and that metamask is operating as an unregistered broker and dealer. And that's supposed to be a decentralized wallet. It's supposed to be it's a hot wallet, it's just something that we connect our ledgers to, we connect Trezors, their cold storage devices, and we, do DeFi and all that stuff. But what they want you to do, they want you to KYC. And we've heard about the KYC with DEXs in the past. I believe Uniswap had put a proposal up there, etc. So we knew that this is coming. And the reason why they want you to KYC is because they want to know all your business, which to me, if you're a law-abiding citizen, if you're paying your taxes, if you're doing the best that you can, and you don't give them any reason to dig in deeper to you, they shouldn't be able to have access to what is in your wallet. And when I talk about a wallet, I'm talking about like your pocketbook, like your purse, or for men, your wallet in your back pocket, or whatever it is you carry. Also, to make sure to smash the like. Come on, guys. But that's a problem. To me, it's an overstep of privacy. And to me, this is all going towards the CBDC. We're going to get into how this all ties in. So that happened this week. So consensys has a lot of money, very similar to Ripple. So they've got a lot of money to go head to head with the SEC. In addition to that, the Coinbase interlocutory appeal is I believe it's due May 10th. John Deaton is also filing amicus brief on behalf of like 4,000 Coinbase or crypto users. And people are saying that they're going to use the Ripple case outcome that XRP is not a security on the secondary market, which I told you guys was an important, very, very important. So now the next thing, so we talked about the SEC. Now let's talk about the DOJ. And remember last week, there was 2 SEC attorneys that resigned over the debtbox case. They're not doing well. Next is the DOJ. CZ he's facing a potential 3-year sentence for AML violation of AML laws, which is absolutely crazy. I mean, this is the thing. I'm not saying he's perfect. I'm not saying Binance is perfect, but the banks are so much worse, so much worse. And a bank got seized earlier this week, yesterday, I believe. We'll talk about that too. So not only do they want CZ to do 3 years in prison for what, then they also fined Binance $4 billion, which is the largest fine ever. And I pointed out the differences between JP Morgan and Binance on Twitter. Can't do it here, but on Twitter I have. So that's a problem. And then on top of it, they arrested Samurai Wallet developers. Basically, Samurai is a Bitcoin mixing services. All it does is when you send a transaction from point A to B, it mixes it. You get all your Bitcoin and that lands in one transaction. These things you can track. Like if you're good at blockchain analytics, you can figure this stuff out. Plus with AI, you can figure all of it out. But the reason why it's problematic is they're blaming these guys, I think, for $100 million of violations, which in reality, they cannot they can't really prove that it was all the Samurai Wallet people. It's just people using the platform. Just because somebody is using somebody else's services for bad doesn't mean the actual service provider is bad. No, it's different. Yes, First Republic collapse. We're going to get into that. So that's problematic. Again, I told you guys, what happens in other countries happens elsewhere. And a lot of people are like, oh, well, this is just happening in America. It doesn't matter. No, it does. Because your public servants in other countries and other places see what we're doing in America, and we see what you're doing elsewhere, and we want to stand in solidarity. So we do all this effed up stuff, and that's what's happening. Remember with the Tornado Cash devs, and I told you guys this is a big deal. Next, FBI. The FBI put out a statement, I believe it was yesterday or the day before, warns against money transmitters, basically hot wallets and decentralized exchanges. So if you're using like a Trust Wallet or a MetaMask or a Phantom Wallet and it is not registered as a money license transmitter, they can take that down. So if you don't have your private keys, you're gonna get effed up. And the thing that sucks about this is that majority of people that are using these decentralized services are tax paying. They're good people. They're not doing anything bad. So the fact that they want to go after all of this stuff and basically punish the good people because of a couple bad people is not even about that. They're doing it for control, for a CBDC. So again, that's another problematic action from the public servants in America. It's crazy to me, and you should be concerned. Make sure to smash the like. Only 21 or 28 likes, 300 people in here. Come on. Next, this is the big news. The DTCC. So effective Tuesday, ETFs that have Bitcoin or any other cryptos will have zero collateral value. So what does that mean? That means that next Tuesday, first off, there's no crypto ETFs right now that I'm aware of. Second off, we've got the Bitcoin spot ETFs and Bitcoin futures, all that stuff, okay? So basically, Wall Street cannot take their shares of the Bitcoin spot ETFs and then use it for collateral for margin later, because that causes a lot of volatility in the market. And initially I was like, what in the actual heck? Like, I didn't even know that type of stuff happened. Like, it is crazy, the insane things that Wall Street is able to do legally. And in order to really participate on Wall Street, like the hedge funds and all these institutional investors, you have to either make like $250,000 a year, I believe, or have $1 million in assets, something crazy. So the things that they get to do to obtain more money, we don't get to do because we're poor, because we're not accredited investors. It's crazy. It's absolutely insane. But after going through this a little bit more, Caitlin Long, she basically said that she agrees that it's a good thing that they can't use their Bitcoin shares as collateral for margin, because basically they can't blame Bitcoin for any type of crazy actions by Wall Street. So if anything, that's kind of a good thing, because Bitcoin's already under heat. It's already under heat as it is. So I guess in long term, that's a good thing. But really at the same time, why are crypto products being treated differently than things from traditional finance, when we all know that Wall Street and the banks and the public servants are not being honest? So after that, we found out, I believe yesterday, that Republic First Bank officially collapses and was seized by regulators. What does this mean? Well, remember when we had the banking contagion that happened, the three S banks, Silvergate, Signature, I think, and another one, don't remember. Anyways, they blamed that on crypto because they said there were crypto accounts there. The crypto accounts are not the majority, okay? It's not the majority, but they blamed it on crypto. So the reason why I'm bringing this bank up as well is because if they say later that the banking collapse was due to crypto, don't believe them. It's not a crypto problem. Because what these banks do is they take your shares, your money, whatever it is you put in, it is their property. It is their property. The FDIC insurance is a big scam, and you would only get a percentage back, please. And that would run out like that. I think it only covers like 5% of everything. But the moral of the story is that we have the banks, the public servants, traditional finance, the Fed, people that are in charge of the monetary policy making horrible choices. And then we're dealing with the consequences. So it's not a crypto problem, any way, shape, or form. It is a public servant problem. It is a traditional finance problem. It's an elite problem, and they're forcing us to deal with their problems. That's why you should be pissed off. And in addition, with the stablecoin stuff, all the stablecoin like Stripe and this and that, cool, happy for it, I'll grift with it, I want to make money. But at the same time, that is all introducing a CBDC. That's what you're going to be getting. So anyways, Bitcoin is holding pretty well considering all coins are red. But thank you guys so much for watching, and have a great rest of your day. Bye-bye.